Good day, YouTube subscribers. How you guys are doing? My name is Marcus. Welcome back to Real Talk with Marcus. If this is your first time to my channel, hit that subscribe button. If you're already a subscriber, don't forget to hit that notification bell, guys. So today we're going to be talking about investing your first $100. What's $100? Really, seriously. All of that coming back. Stay tuned. Welcome back, guys. How y'all doing? So this is a question that I get asked frequently. How do I start to invest? How much money do I need to invest? And how do I go about investing? So I'm here to tell you guys today how to invest your first $100 into the market. And from that point on, how you guys can actually follow it, if you guys been following my videos on season 1, and how well you guys will track it going into season 2. So with that being said, let's go into it. So what's $100, right? It's nothing. I mean, think about it. If you're driving your car around, right, and you have to put gas on it, some cars get $20 you got to put in, others are $30. And if you're a big boy and you love your big motors and you love your big horses, that's an 8-cylinder. So we're looking at $40 or maybe $50 you're spending on gasoline alone. That's just gas alone. Then let's say you hit the grocery store, you buy a little something here, a little something there. $50, $60 go quickly like this on the grocery stores. So when you look at it all up, so let's say 50 for gas, another 50 for groceries, your 100 is done. What did you get really out of it? Well, you can say, hey, I got gas and hey, I got food. That's true. But in return, what is it doing for you? Not really much. I mean, it's part of essential things that life we need. But again, it's not the necessities as far as to what you're going to need to continue moving forward and actually growing. So let's reverse that now. So let's look at this $100 here again. All right. So we broke this down as 40 for gas, maybe $60 for, let's say for food, $100 done. That's it. All right, cool. Now let's break this down again into an investment and let's see how that works out for you. So here's $100 again for you. All right. Today's your first day you're going to invest. You're going to say, you know what? I'm going to throw away $100. It's basically how you have to see this. It's money that you're not going to be using for right now. It's money that you're going to use or capitalize later down the long run. So let's start this again. Ready? So here's $100. All right, great. You say to yourself, hey, I want to buy a stock. All right, which stock you want to buy? You did your research. You found that that stock is pretty good. You're going to go ahead and buy a stock A, B, and C. Great. A, B, and C is a great stock. Guess what? A, B, and C happens to be that it's $10 a share. All right. So you say to yourself, how much can I buy with $10 a share? Well, if you're running from a platform that's charging you fees, do calculate that in. Some platforms charge different fees, so you have to calculate that in. If not, and you're using an app that doesn't calculate fees, then you can actually put in as much as you can. For a first-time investor, I try to explain to you guys or try to tell guys that the best thing to do is get yourself a platform that doesn't actually charge you commission fees, because commission fees can eat up your money very quickly, and you're trying to get away from that, especially if you're a first-time investor. So if you're looking for a platform that doesn't charge commission fee, you can do your studies, or if not, I'll put a card on the top, and I did a video about platforms and which kind of platforms you should be using. Also did a blog to go along with that, so you can see the feeds for that. All right, guys, so $100 starts you off. You buy stock A, B, and C, which is $10 a share. All right. If you have no commissions, then you can go the full throttle. You can buy 10 shares. Yay, 10 shares. You bought 10 shares. Hey, you're a rich man now. You're halfway there. All right. So you got 10 shares on the market. Now what you need to do? You say, okay, I bought it. What do I do next? Well, now you just have to now wait. With time and appreciation, that stock value will go up. Providing that you guys did your studies and providing that you guys actually did your research and you know everything that you need to know about that company. Investing blindly is for fools, and you'll never walk a short pier knowing that it's the end. So then therefore, always look ahead before you actually step forward. So investing is the same way. You have to look forward and knowing that that company is going to be around for next year. So this way you guys can make some profit off of it. So we have stock A, B, and C. You bought it in January. You start looking at it. Let's say by March, 3 months later, you got the analyst report that comes out. That's called a quarterly. So this is what normally companies go through on the stock market. On the SEC exchange, they actually have to go ahead and analysts actually report on what it is that they're expecting for that stock to do. So if the reports are positive and the company beats those reports, well, what happens to that stock? Well, 9 out of 10 times that stock decides to go up. And sometimes, normally, the stock always goes up with a report, but there's sometimes that it doesn't. And you know what? It just stays where it's at. But your chances are that it will actually go up. Great. So if it goes up in those first 3 months, and let's say it goes up by, let's say 3%, 4%, which is very minimum for a stock to move regularly on the market. All right, so that's 3 cents on the dollar. That's fantastic. Now you start looking at gains. Now this is where it gets a little bit more interesting, because as that stock is moving along, you're starting not to get those gains. Those gains is exactly what you're looking for, and is exactly what you want to be capitalizing on the market. So now in 3 months, if you bought this stock when it was only $10, now the stock is valued maybe 11, 12, or let's say $13. So if it goes up 11, 12, or $13, that's pretty much gain for you. $1 a stock, $2 a share, or maybe $3 a share, depending on how high it's going. Now you say to yourself, great, let's go for all broke here, guys. Let's say that stock did $3. Woohoo! $3, fantastic. $3 with 10 shares. 10 times 3, oh man, that's $30. So you're saying to yourself, in 3 months, I made $30. That's great. Now, for a lot of guys who are watching this video saying $30 is nothing, man. What the hell am I going to do with $30? Now, remember, we only invested $100. So for those big rollers who want more than just $30, you have to invest a little bit more. But we're talking about for the first time beginners who are coming in and don't really understand the market and not looking to put in that much money in. But yet in return, they'll get that much money out. So now you have $30 in 3 months. You're saying to yourself, hey, that's fantastic. So when you calculate it, you're saying to yourself, $10 a month. $10 a month for interest is fantastic gains for a stock. Put it this way to you guys. If you left that $100 in the bank account, 3 months from now, would you have got $30? Something to think about. Remember, every time you leave your money in the bank, it's as good as gone. People say, hey, well, I saved my money. I put it in the bank. You know what I'm saying? That's where it grows. Wrong. That concept of thinking is the wrong way of thinking. The bank is actually taking your money and investing it on the market, but meanwhile, and on return, they're giving you pennies. But on the return side, you can actually be making dollars and actually be giving the banks pennies in return. And that's something that you should be thinking about, and something you should be moving into that direction. So with that being said, we got 3 months into the market, we got $30. Great. Let's say for the next quarter coming in, which is now the second quarter, the analysts report, and let's say the reports were no good. Let's say, damn it, the stock is going down. Great. So we had it at $13 and some change, and it decided to go ahead and drop. And it dropped back down. And now it dropped down to $9. We're going to go ahead and extreme now. We're going to go broke here, guys. All right, $9. You're saying to yourself, damn, $9? I'm losing $1 a share. That's correct. You are losing $1 a share. But here is the flip side to that. Now remember, if you bought this stock when it was at $10 and you thought that was a great deal, now you have this stock at $9. Why wouldn't you buy at $9? Isn't that a better deal? So instead of you actually looking at it as a negative, look at it as a positive way. Because remember, in the long run is what you're looking at, and that stock is going to actually, in the long run from your studies, is going to go up. So eventually it's going to go right back up. And that's what you want to do. You want to actually catch it when it's actually on the down. So let's say it goes down to $9 and you say to yourself, you know what? I got another $100. I'm going to throw it in there now. All right. So now we got $200 thrown into this stock here. Now remember, you paid $90. So you still got $10 left over on that stock, which you can actually do something with it, or you can actually not do something with it. So it's up to you. So if you go ahead and buy it, you can buy 10 and that gives you 90, or you can go 11 and that gives you that gives you just enough to actually cover for it, and at the same time leave you some change on the platform. Great. So now we're looking at 10 stocks and 11 stocks. That's 21 stocks. 21 stocks in 6 months. Remember, you started off with 10. Now you got 21. What does that mean for you? Next report coming up. Next report shows positive again. Now the stock goes back up. Now the stock goes up again to the $13 marker. Great. Now let's multiply that again. Now you have $13 times 21 stocks. How much is that for you guys? Well, you know what? I'll give you a minute to think about that. I ain't doing the math for you. Go ahead.
Day 2, day 3, day 4. A few moments later.
All right, guys, y'all made your math? Y'all saying to yourself, I don't got time for that crap. Excellent. 273. Now you got $273 that you have on the market. Now remember, you invested now $200 and you made $73 out of it. Woohoo! We're only 6 months into this and you got $73. If we keep going in this direction and we go into the end of the year, hopefully that the stock is provided that you pick is actually doing fantastic, you will make more than $100 of gain. Now that $100 more of gain is what you would never get if you actually left that money in the bank. Now remember guys, this is all scenarios and this is all that we're doing here. We're playing a scenario and we're actually seeing how that stock goes, whether it's going up or whether that stock is going down. In either direction that the stock is going, you're actually benefiting from it. That doesn't mean that when the stock is down, you actually go ahead and just sell it. There's some stocks that don't do great for the year, and here's the plus to that. So let's say you bought a stock and it did horrible the whole year. The whole year, this bad boy is just no good. It's rubbish. What do? Well, you can actually write this stock off. You can actually go ahead and write off this stock on to your taxes, which is basically what a lot of stockholders do coming down into December. They wait and see how well that stock is doing. And if you notice, and if you guys are noticing, in December, you start getting a lot of cheaper stocks because a lot of people are now cutting their losses. So you can actually claim it as a loss and actually get money for that stock. So either way, again, you go, hey, you're a winner. So you see what I'm saying? You're not really losing, you're actually gaining on the run. So that is today's lesson. Hopefully you guys learned what it is to invest just $100 and see how $100 grow into $200 and $273 and maybe even more. So hopefully this has been an educational video for you guys. And as always, don't forget, more gains, more gains, more gains, giving it your maximum effort. Peace out.